Social media interactions become interesting only when it is two-way. You must get a fair chance to interact with the person you follow or the person whose videos you watch. I have started this new initiative, Ask Milestones to Wealth Anything, AMA in short, through which all of you can stay in touch, ask me questions you like to ask, clear your doubts on personal finance, learn more about Milestones to Wealth and about our PMS products, and stay connected. So, this brings us closer. I'm able to be closer to you, to help you in whatever way I can. You feel closer by asking whatever you wish to, and we grow together, helping each other along the way. So fill in this form and stay connected through Ask Milestones to Wealth Anything. Friends, in this video I'm going to talk to you on the topic Conservatism always pays. There is a popular perception in our minds that being conservative in investing is not a good thing. We believe that you can't improve your returns if you're conservative. This is not true. There are times when being aggressive can lead to grief. And there are times when being conservative will safeguard capital. At times when you have to safeguard capital, if you act aggressively, you are likely to lose future opportunities, spend time correcting your mistakes, and once again becoming conservative at the wrong time. So, if you are not conservative at the right time, you end up being conservative at the wrong time. This, I believe, is the one thing which an investor or an advisor has to avoid. So, if you are conservative at the right time, you give yourself an opportunity to become aggressive when the opportunities are ripe. So, if you are one of those who at the bottom of the markets was worried about returns, it means that you did not appreciate the opportunity, nor did you appreciate enough the power of being conservative earlier on. I see a number of peers and friends talk now about how they have made very high returns by investing during 2020. As the markets fell, everybody has had their own fair share of a few personal choices which have worked very well. The outcome of this success seems to be that the investors are willing to abandon conservatism at this point in time. This, to my mind, does not make much sense. If an investor has had such rapid success, he should think whether his returns have got advanced and have been realized earlier than they ought to have. That is how he starts on the journey to being conservative. Then he decides whether he should choose a safer asset or an option. In this, I am sure a lot of advice is going to be needed, because the aggressive bets which you might have taken during 2020 worked in a secular rising market. I am quite sure that we are not going to have a secular rising market forever, and you are going to drift into a volatile market sooner than we imagine. If that happens, then you should have the right advice to protect whatever you have made now and to move your investments into a safer avenue. By keeping it in a safer avenue, you choose to go on the path of conservatism. You choose to move your money from an aggressive investment to a conservative investment. Subsequently, when markets throw more attractive opportunities at you, this money that you conservatively invested now
will be available for you to repeat what you did in 2020. It's very important that those who are with advisors understand that the advisor is doing this for them. Many people only look at returns, they are looking at returns all the time. Whether it's a bear market or a bull market, we are always looking at returns. We are comparing returns, but we are not assessing the investment stance. Is it conservative or is it aggressive? Is our risk appetite lower or higher? Are we aligning our investment decisions to the opportunities, or are we aligning our investment decisions purely to our return expectation? Are our return expectations correctly curated? Should our return expectations be based on what happened in the last 1 year, or should we change our return expectations and become more realistic? These ought to be the investment priorities of every investor, and he should expect this from his advisor. If we are not doing both of these, the chances are that we would not be able to retain the good things that happened to us in the last 12 months. I am sure that everybody who has had a good run in the last 12 months would want to build on this, not slip and then struggle to regain what you lose. That intention is something you need to display in how you choose your path going forward.